Well, from Moscow to Brussels, Chris Burns is standing by with today's European inflation figures and what they could mean for the ECB. Chris?
Deirdre, around zero. This is the first time that these figures have hit around zero in the 13 years that the EU has kept these records. Inflation has steadily fell since the crisis, and hitting zero is significant. A lot of people say that it is time really for the ECB to lower its interest rate even further. But it's because companies have been cutting their prices, because the energy prices have fallen some 50% over the last year. But even the ECB is cautioning about this. They say, yes, there could be deflation in mid-year, but it could return to inflation. And one interesting figure in these figures we saw today was that labor costs rose 3.7% in the first quarter of this year, and that is more than analysts expected.
So, Chris, I mean, what does this mean then for the ECB next month?
Well, there is a big debate over really how much to continue this stimulus through governments, through monetary policy, whether there should be an exit strategy, but that is versus the idea that perhaps an exit strategy too soon could kill off green shoots. The ECB Council member Ewald Novotny of Austria says be very careful. If you start an exit strategy too soon, you could hurt and kill this recovery when it does start. He said it would be very dangerous to start one sooner than later. There's also been a record drop in Eurozone manufacturing in April. Keep that in mind. And the EU says the Euro region could contract some 4.6% this year. Also, though, on the other side, keep in mind that the ZEW German Investor Confidence Index today rose more than expected, as you said, a three-year high.
A three-year high, yeah, that was a big positive surprise. But, Chris, I mean, how does all of this factor into the splits, the disparate voices at the ECB?
Yeah. Well, yes, there are plenty of allies of Novotny on that ECB Council, but on the other side is Axel Weber of Germany and others who say, wait a minute, watch out. If you do continue this stimulus too much, too long, you'll get an asset bubble that'll cause the next crisis. So it's time to get out quickly, as soon as you can, as soon as you have indications of an economic recovery.
Chris Burns, we thank you as always there from Brussels.